But you've also argued, look, it's not as deep a moat as Amazon delivery or Google search. And so you were unwilling, you say, to pay for what the street says is a proper valuation. What would change your mind?
I think what would change my mind is less competition that's coming in streaming, right? You're just beginning to see Disney scale, HBO Max scale, Apple get in the game, Amazon keeps spending. This is a business that's very capital intensive. To your questioning of Julia, it's a broad service, Netflix. You need a ton of content because you never know what's going to strike. It's a bit of a random walk. So I think if the intensity of competition would lessen, I get more comfortable about their need to spend. But as she said, and your questions are great, they're playing a different game, and it's a very expensive game relative to what media used to do, basically.
Does that mean that if they sourced more shows out of low-cost areas, as Squid Game is such a great example, that would lead you to less pressure on the content budget?
Yeah, if all of a sudden we see a Squid Game happen every month, every quarter, right, that they're able to find other cheaper ways to bring us hits, that would then prove perhaps their spending will slow and they're able to sustain all the subs they've added and all the pricing that they want to take. Right, but that's the great test going forward as others also ramp up around the world to try to do the same thing.
Right, and Michael, if the next revenue stream is in fact gaming, did you like what you heard? We heard very little on the call last night. They said that, yeah, they're begun testing in some countries, but it's still early days, part of a subscription, no ads or in-app purchases. What did you make of it? Are you even optimistic that they can pull this off?
Yeah, it's early days, as you said. I have learned over my career never to count out Netflix. They're great at execution. They're great at moving towards a single goal. If they put their mind to it, they can do it. But at this point, it's a free service attached to their content. I thought the point about Reed made about trying to look like Disney is interesting because that's going to be a challenge, right? Their content is so ephemeral. Squid Game, you can watch it in a night. It's now over for a lot of people. It's different than what Disney's built, which is these recurring franchises, and they have the parks and consumer products. So that, to me, is a bigger challenge. But, computer games or mobile games, why not? But at this point, we don't model it, and it sounds like it's still really, really early days.
Michael, so much of Netflix's streaming rise has been during this time of a bull market and relatively cheap capital. And you mentioned they have to spend a lot to keep this going. So I mixed that in with seeing that Netflix had engagement spiked like 14% when Facebook was down. And think about how they're competing in this attention economy by spending. What happens if inflation stays high, interest rates rise? It's not as easy or free to spend in the general economy. What does that do to Netflix?
Yeah, it's funny because I'll take it further. I think the era we're in, where there's just free capital, low discount rates, gives companies like Netflix that are built on a TAM story. I think you heard Reed say a bunch of times yesterday, our TAM is the global TV market, right? Just imagine how big we're going to be. And you can go out 5 to 10 years, and to Julia's announcement that people raise their price targets when it was inline quarter, inline guide, says that people are willing to go out a long way. I would say on the consumer side, higher rates and inflation probably won't change spending here because this is a good value. But I wonder what the stock market would do to a company that doesn't have a lot of cash flow support today or even tomorrow on valuation. And that's been my, one of my rubs is, I've been an analyst for a long time. 10-year money doesn't usually come at 1.5% forever. And if rates start to rise, the ability to use a discounted cash flow to back into a valuation gets harder. And that's like your question's dead on. And I think in the next 6 to 9 months, we'll come back and you'll ask that question again. And you'll start asking analysts, why did you raise your price targets $50, which is $20 billion on no change in fundamentals, right? It's just a really strange time. And I think it's not sustainable.